Well, it's Market Day Report. We're so glad you're with us. And, you know, we are a little more than 24 hours away from the next World Ag Supply Demand Estimate WASDE report. The August WASDE report could be a market mover. We'll see a couple of things. One, what will we do with demand numbers? What will we do with acreage numbers now that we're pulling that from Farm Service Agency and we're doing that earlier? And what about yield? So three things that I mentioned there we'll keep an eye out. That report comes out in less than 26 hours. Okay, before that though, what's happening in the markets? And it looks like we're kind of treading water. You know, Sam Hudson mentioned this about 30 minutes ago. That December contract is trading from 458 up to 464. So nearly a 6-cent trade range. But again, just not a whole lot of movement here. Down 2 pennies, 459 3/4. We go from there over to the bean trade, and beans are down 7 3/4, 1171 3/4. We did have that flash sale of soybeans to China, 5 million bushels, and we also had the Philippines taking some soy meal, 180,000 tons. How about the cotton market? Yep, cotton up 30 points at 84.16. Might be a little more weather related rather than WASDE on the recent rally here in the cotton market. And speaking of weather, what about the wheat market? Well, we're seeing dime lower trade right now, 630.5. But look down at July because that could indicate whether or not we try to buy acres for next year. 676.25, down 8 3/4, and then hard red, same months here, front month up, are down 9 3/4, 703 3/4, and 8 cents lower on July at 740.5. Our guest in studio, Chris Swift, Swift Trading. And Chris, I wanted to bring the wheat in at the end for a couple of reasons. One, we see what the front month's doing, what's in the bin, but I also wanted to look towards next year because we'll be rolling planters before long, and we're dealing with drought here in the U.S.
and everywhere else too. So interesting. Let's not get to tomorrow because tomorrow's WASDE report. We're going to know then, but a year from now, as you state, Europe is in a severe drought. The next probably coming could be Australia. We know that South America could be impacted greatly with this super El Nino. And here we are at the U.S. fixing to grow pretty much a trend line crop yield on there. We need to prepare for what may come next year, not necessarily here in the U.S. or for our planting, but around the world. So back in January, we discussed at one of our meetings that the world needed some kind of crop failure somewhere or another that would give an undertone to it. I think that undertone is already here. If you look at the bean chart, we've been in an uptrend for a year and a half now. We're much closer to 12 than we are 11. If we look at corn, corn has been very volatile, extremely volatile, now hanging up towards the top end of the range. And wheat has continued to make new contract highs into Kansas City. It backs off sharply. It has some of the world events going on with the Ukrainian. There is just a big issue out there coming up for a year from now.
Yeah, we're looking right now 6 month on the bean chart, and that's exactly what you were describing there. Here's the 6 month on the corn, and you mentioned the wheat. Was it hard red or Chicago there?
Kansas City.
Okay, so let's go to, we'll look at the September. I don't have next year's July ready yet, but again, just shows you something.
Well, yeah, you're 50 cents off the high, and wheat trading at $4 a bushel is not uncommon whatsoever, and here we are at 704 and only 50 cents off of the contract highs.
Wow. And at this point, we're talking about what could encourage a few more acres.
And it could. Probably what we really need to think about is what are our producers going to be doing? And so especially when I look at corn and I see the volatility in corn that we've already had, and if we start getting some of this super El Nino to impact South American corn, we already know we got Mexico as a larger corn buyer now from the U.S., it just would not take long to chew through some of this. And of course, we throw the energy aspect into it. You got an E15 on there because we keep moving higher in energy prices, then we could really create a very good bull market in corn.
Wow, see how everything's kind of intertwined there. And we didn't even talk about the sugar market, which when we talk about Brazil and sugar and ethanol, and wow, this, again, not just playing checkers here, it's 3D chess.
Yep.
So quick break here. When we come back, what about those dry conditions and livestock? We'll find out next with Chris Swift. This is Market Day Report. Livestock, protein, yeah, we start not with the cattle, but the hogs. That's right. After 2 sessions higher, we're in the red right now. Just, again, slight losses here, down 77 cents on the October at 82.90. Talk about a tight trade range. We're not quite to a dollar trade range on the October contract. And then you look at the other months and, well, we're not quite a dollar there either. So very quiet here in the hogs. And how about feeders? Well, we're up 285 on September, 347.42. That August contract set to expire in just a couple of weeks. Live cattle futures, same story there with the August at 233.62. It's up 35, but lightly trading. Most active here is October at 227.72. It's up 82. Really ties in with our last conversation with Chris Swift, Swift Trading. We talked about 2 things, dry conditions. We talked about wheat. Now, across the portions of the high plains, they'll put wheat out and then turn cattle out.
Right.
And then you really need to have the cattle off probably by the 1st of February in most instances in order to be able to take that to a harvestable crop. But at this point, it's so dry, that may not be an option either.
No, and we're hearing a lot about hay and the high demand for hay and some high prices for hay that we've got coming forward. And the drought has clearly messed up our pasture conditions. It has put them at a very low rating. But what I keep hearing through the grapevine is we're backing cattle up. We back cattle up into the feed yard, and now we've seen some deaths from not being able to move those cattle fast enough. We've seen some really low volume of sales in our stocker and feeder markets, especially in the video sales we've seen. Really low volume. Nobody's wanting to move cattle out there. So now we're kind of backing up. Last week, that might have broke just a little bit. We sold a large volume of cattle to the packer. They probably got enough to hold out for the next week or two. And we started seeing a little bit more movement coming in now in cattle. But probably where we're missing the most is those drought cattle. They're still kind of hanging on, looking for that rain, trying to keep them out there. But somewhere within the next 2 to 3 weeks, we're probably going to see more inventory to work with as we have to shift back into now a more fall-type atmosphere. We may get some rains back, but if we do not get those rains, I'm going to expect a lot of cattle to move, and they're probably going to go straight to the feed yard.
Now, if we're talking on the cow-calf side, and again, that drought kind of ends when you get to, in Texas, I would say somewhere around I-20, maybe that Abilene area. So as you start moving south of that, you get into more of the cow-calf operations there. Otherwise, are we setting up to where we could start holding back some heifers?
We could. I think it's going to be interesting. When I look at the Southeast, it's always been kind of a nursery for cattle. We don't grow cattle very big here, and it's pretty much a nursery, and a lot of that is gone, never to return. It is now under construction. It has been urbanized, but it's never coming back into production. So we've lost 1% that will never come back in that production side. So we're going to be even more reliant upon the western states there to be able to increase our cow-calf production, as well as maybe even Mexico and Canada. If either one of those could ever start a rebuilding program of theirs and rebuild the herd, then we might see something. But I think it's going to be difficult to get expansion going to where we'll really notice it.
Which then puts more pressure on packers. Let's say we close 1 or 2 packing plants, and I don't have any in particular here, but if we close 1 or 2, does that actually open a door of opportunity for others?
Well, I think the smaller packers, yes, it does, because that's what a lot of the government has been trying to do, is trying to get more activated, more packers active in smaller areas there. And so we already saw a big growth of that from the 2021 through 2023 timeframe. Now they want to continue with that, where the packers want control, and they're probably, because of the low numbers, they're taking some of that expanded inventory or capacity away from those smaller packers that was going to give it back to them again.
Yeah, this could be really interesting.
It is not going to slow down anytime soon, and probably expect more of the unexpected.
I think at some point we'll look back in history books, if we have books then, and we'll look at this time of this bull market, things that led up to it, the effects of what happened, and this is going to be an amazing case study.
It'll be one for the history books for sure.
Yeah. Well, Chris, great to see you.
Absolutely.
Thanks
Good
for
to be
popping
here.
in. Chris Swift is with Swift Trading.
Expect the unexpected. I feel like that's what I've really learned since I've sat here at this seat. You never really know when it comes to all of our ag headlines.